Good afternoon, everybody. I would like to welcome you to our webinar on GlobalLeaseCenter, the IFRS 16 tool. Before we start the webinar, I would like to share with you some logistics. That everybody is muted, so we will not hear you. The webinar will be normally maximum 1 hour, maybe less. We do foresee some Q&A also at the end. You can ask your questions through the webinar app tool. There's a question area where you can put your questions in. We will try to answer them at the end of the call. Otherwise, we will come back to you later on that. We will make the webinar available afterwards. You can find the handouts, the slides that you see in the handouts section, and there you can download them, but we will also send them to you by email. My name is Sam Verfailly, and I'm a partner at Finvision and working on IFRS consolidation, reporting, and also XBRL. We work together with Amana since a couple of years, where Amana supports Finvision with the tools to realize projects in the area of IFRS and reporting. And we are also the reseller and the implementation partner for Amana tools in Belgium and France. For example, the GlobalLeaseCenter tool that we will show you today, Smart Notes, which is a disclosure management and XBRL tool, and the XBRL word tagger. And we are very happy that Christian Groove, who is the IFRS 16 subject matter expert at Amana in Germany, could join this webinar, and he will walk you through the features and the benefits of the tool. So agenda, primarily we'll focus on the demo and showing you really the tool and how it can benefit to you. And at the end, we will also have to share with you some best practices and some pitfalls. Basically, after a couple of quite some implementations of IFRS 16 that we have done in the past months and last year, and that may be of interest of you. So let's start about IFRS 16. IFRS 16 is unfortunately it is a complex standard. It may look not complex because you may say, well, it's only from a top view, it's only recognizing a lease asset and the lease liability, and in the beginning they are the same, and lease assets are depreciated and liabilities are then using the amortized cost method decreased or recognized in P&L for interest and etc. But it is complex in the details. You can have a lot of issues and questions about which leases should we recognize as a lease asset, what is the lease term, what is the non-cancelable period, how to deal with non-lease components, how to measure your lease liability, and many more questions. And actually, the IFRS 16 GlobalLeaseCenter tool of Amana will help you to go through all those complex details. And so they have developed a kind of standardized process and a very intuitive user interface that you actually will see within a couple of minutes, and that simplifies the process for you. So the user interface will guide you through several steps until measurement and until reporting, and reporting includes also exporting your journal entries so you can import them into your accounting system. The tool also ensures that there's no inconsistency in data. There's some validations done on data fields, or all data fields completed, or they completed in the right format, and etc. Also, the formulas to measure the lease liabilities are all already embedded in the system. And also, the tool is flexible for your purposes. So the posting schemes for the journal entries that you need to export from the tool for import in your accounting system, those can also be customized to your accounting system, whether it is SAP, a local system, Navision, AX Dynamics, etc. It doesn't matter, actually. It is independent from the accounting system. If you look to the process, this is but the process, but actually you will see it better in the tool. We start with, it's on the left side importing, the import, we can import data, the contract details from Excel, from XML, from CSV. We can also have manual input. Sometimes some complex contracts is better to input them manually rather than through an automated or an import feature. But for example, all your car leases, you can import them through Excel. And then you go through all the steps. You start with data collection, which is your contract management. You will do some categorizations. For example, if you have defined that the low value lease assets are not recognized, you use the exemption, then in the categorization, the system will exclude them. If you have included them in the data contract, in the data collection, they will exclude them from further accounting under IFRS 16. You do the calculation, the system does the calculation, and it will propose your accounting entries, and then you have your data output. Data output can again be in different formats. Mostly used will be Excel. Okay, so let's now start with showing you the tool and the features and the benefits. I will give the word now to Christian, and who will show you the GlobalLeaseCenter.
Okay. Thanks, Sam, for having me here. And yeah, let's start with the tool. It's a web-based application, so it will be installed at one central server, and all your entities around the world will enter their contracts with the web interface. This can be on your intranet or on a safe Citrix or VPN connection. Before we start entering a contract, I would like to give you a short overview of the setup of the system. This is really something that you can get started with in a matter of days. So Sam is doing a project this week where he will set up for a medium-sized group the whole setup during the kickoff, and also will train the first contract entering. And there's not really too many things that you really have to enter, but you have to make sure that the information and the decisions on what you want in the tool is already there. The first thing is pretty apparent. You need all your companies in. So for today, we just want to enter one company. We will call it the FinVision. It's a different keyboard in Belgium and in Germany. So there's the company code. No. Have the shift locks in. Yeah, there's the company code to it. We can pick a parent company. We can pick the functional currency. We can pick the country. And we could also pick a country-specific currency. And that's basically all the information you would need to enter a new company that we will account leases for in a second. So now up here, and the system comes in English and German, and now we can pick the FinVision Newco as the company we want to account for leases now. Then you can enter and set up the profit centers, cost centers, and business units in the master data, and they can then be used on the leases and will also show up on the posting entries. It's fairly important that what we found out during our projects, that you have at least the cost centers there, because a lot of SAP systems won't allow imports without cost centers. That really depends on where you need what information. That's one thing you normally should discuss with your accounting department and the systems that you have in advance. Then we have the currencies in here. It's basically all the currencies that you have contracts in, and the currencies that you have in your entities. And when I mean currency of the contracts, pretty often in Eastern Europe, for example, you have euro contracts, even though you might have zlotys or other currencies as your local currency, as your functional currencies. And then the asset is treated differently as the liability. But we can do that. That's just things we would discuss with you in advance when we talk about projects. Asset classes. That's really one important thing that you should know on what detail you want to account for your leases. Do you need to mirror all your asset classes that you show in your financials, or do you need even more, or do we need less? In here, we only have cars and real estate, because for our demo, this would be the most important asset classes that we want to account leases for. And if later we allocate an asset class to a lease, then this also gives the account numbers, the asset accounts, that the depreciation or the movement types and everything will be posted to. We have low value thresholds that you just enter by currency, and then we have the interest rates, and we have the interest rates by currency and by asset class. For example, in here we would have the South African rand, I think I picked, and in here we would have, for certain durations, the interest rate by asset class, and this interest then will be automatically drawn based on the lease term from the master data to the contract. And this is really one thing where there's a lot of discussion with accounting, treasury, the auditor around what is the appropriate interest that should be used in my group. We have groups who say we have central borrowing, and they agreed on one interest rate structure for the whole group. On other, it's by currencies, and with others, it's even more complex. And this is also really, if you open up that everybody can use their own interest rates, you will come to interesting results. Then we also have users and roles, which basically just says that certain people can see certain things and other people can't. You have people that can only enter contracts for one company, others can calculate, and even others can only read but can see everything. That's basically the role I would like. Okay, data collection. In here, we would have all our lessors. You can have them by company or by group. And then we have contracts. Contracts only is the header of the contract. We might have a frame agreement for cars, and then we have one contract, and beneath that contract we have 100, 1,000 cars, whatever it is. And then those would be the contract components. So we want to add a new contract here. We can pick the lessor company. We have a contract ID. That's also something you should discuss in the project. Is this your purchasing number? Is it the contract ID on the country from the supplier? Or is there a unique group number? Whatever it is, those are things if you want to use the data that you have in your tool later on, because you will have one database about all your leases. This would be a good marker to find contracts back and forth. So that should be set up in the project, what should be in there. I think I should look at the keyboard and don't do 10-finger blind. And you see again, if you entered everything, it comes green here. And on this tab, we have 3 more fields that we need to enter. So in here, for example, we could have a contract that starts at January 2017 and would run for 120 months, 10 years. And then the tool will calculate the correct ending amount, or you get the ending amount and the month are calculated. And we could also have a file attachment here, which is fairly nice if around the group everybody attaches their files, as long as they're not Chinese. You have a pretty good chance on reading them and doing some central controls, ticking and tying numbers to your contracts. So we save that. Now we have our contract in, and beneath that contract now we will put the actual components with all the payments and all the information that is needed. And remember, we are all doing that for the companies which we just have set up. And we tried to build the tool in an interactive way. It's I always say it's kind of like the immigration in the US. You have to answer a lot of questions, and if you give the wrong answer, you have to answer additional questions. So we start with the decision tree under IFRS 16. Is there an identifiable asset? Yes, we rented a 10-year lease for housing. And yes, I decide who works there and what we do in this office building. And if somebody else would have the control, then it would not be a lease component anymore. But in here, now it's a lease component because that's what you want to look at. And you get all those additional fields up here. We have some general, we would have a building. We could choose a cost center. And if there would be more, then yeah, I can choose more. You also would have the accounting area, business unit, and pretty often we see that internal order numbers are required in order to be posted into the system. So we answered all those questions now. Then we would pick the asset class. And you see here, by picking the asset class, it's automatically populated with the interest rate 3% for a 10-year euro lease. In here now we have to enter the useful life of the asset, which only comes into play when the useful life is shorter than the lease term, or if there's a change of ownership or a bargain purchase option or something like that, then the longer useful life will be used. So it doesn't happen too often. And again, for example, if there would be a purchase options and I would say yes, then this additional field would open up. So most contracts are not that complex, but if they are, the tool will guide you through it and will also give on-screen advice with the info boxes on what there is behind certain fields. Let's take a look at the payments. You can set up as many payments as you want. And for example, we have a landlord who negotiated, since it's a very good location, that we have to pay in a one-time payment 50,000 euros in advance. And he wants that payment in February 2017. So we set up this 15,000 euro one-time payment. And since he also wants something on a monthly basis, why can I not? Someone cannot. Ah, there we go. A mouse problem. So we pay 10,000 euros on a monthly basis, and this can be a fixed payment. Fixed payment just means it stays the same for the same time. Steadily changing means going up in a percentage or by absolute amounts, and variable payments, it's normally indexed on 4-person household inflation or something. And the payment would start also in January 2017, going until, no, not November, but December 26. And you can say if it's in advance or not, and then we can just save the payment. No. Oh, payment pattern, yeah, I forgot that. So in here we have half yearly, monthly, quarterly, yearly, and when everything is filled in, we can save it, and now we have all the payments in. In addition, we could also have in the lease term an extension option. We could say that this extension option goes from January 27 first until 28 December. I would say that it's not reasonably certain that we will exercise it, but there's also disclosure around that we have to disclose that what the what the lease payments will be on not exercised extension options. And here I also have to pick 27, 1st of January, and I think we exercised to 28 December, and payment pattern again is monthly, and then we can save that. So now we saved the extension option, and there also might be some additional payments because we paid money to a real estate agent, 50,000 euros. So now we also save that, and that's basically the first step of entering the contract. And Sam talked a little bit about interfaces. What we see is that there is no really good source system for contracts. Normally they float around, and it's a big exercise to get them from all those drawers, files, binders, and so on. And an interface is not really filling an Excel template and uploading that. We've seen so many errors there that we would not suggest doing that. But if you have a good fleet management, then that information normally comes from systems, comes from the provider, and there it's, in a lot of cases, a good possibility to upload information. But for the rest of the contracts, we don't really see that all the needed information with cost center allocation and so on comes from a database. So now we have the categorization, which basically means we put everything in our 3 buckets: low value, short terms, and regular leases. We categorize it. We can take a look at the result. So now this is a regular lease. And now we can do the measurement of the contract. We see our building here. We want to take a look at the lease liability. And now we see that we have our lease liability here. We see the payments. In February, we paid 25,000 because we had this one-time payment. And for all the rest, it's the 10,000. And our lease term goes until 26 because the extension option was not more likely than not. And we see the net liability, the interest, the accumulated interest, and everything. It's a full repayment plan from the beginning till the end. And we see here we have an asset of 1,052,000 for the liability. Now we can take a look at the right of use asset. And in here we see it's 50,000 higher because we have the initial direct cost that goes to the asset. And again, here we have the carrying amount under IFRS, monthly depreciation, and so on. So we have a full depreciation plan of the asset from the start to the beginning. I could now still make changes to the contract because I have not set it to the database yet. So if I'm not satisfied and just wanted to see what would be the outcome with the option, without the option, I could do that. In our case, I'm fine with it, and we just save it to the database. And of course, you can also save all entered contracts in one click to the database. That's also possible. So now the next thing would be posting. And in here, we have a so-called transaction plan. And that's something, for example, Sam and his team would come to you and discuss what accounts are needed, where do you want to post what would be the frequency of the posting, what would be the movement types that we are using, how do we want to set that up. That's a really big part on discussing and setting up the whole lease process. The tool is one thing, but also implementing a good process around it. When are updates done on the leases? When are new leases entered? How does that fit in my accounting schedule? Are really the important things that you should discuss in the project. In here we see the account numbers, debits, credits, for book-ins, for interest, and basically for every asset class there's an accounting theme, and for the liabilities, and for all the things that can happen to a lease, for extensions, for cancellations, for prolongations, for all those accounting events that can happen to a lease. There are the accounting theme in here. And the tool knows if things should be calculated with the new interest, old interest, if it should go to P&L or just to the asset liability. So now we can trigger a posting run. We pick our FinVision company. We just want to do that for our own company. We pick, for example, 2017. We want to post the first 3 months. And now we just click on posting. And the posting run now has been completed. And the next thing is it has been completed, which means that if I go to the data collection, take a look at the contract component. Oh, sorry, I have to go to measurement. For example, take a look at the right of use asset. We can see here that the initial input and the first 3 months have been marked posted and that they cannot get posted again. And in the data output, for example, we set up a standard booking voucher, but in the course of the project, we can also talk about customized booking vouchers. We can also say that for the first 3 months of 2017, we would like to export the booking voucher. And then it will be saved to the repository. We see here that the booking voucher was created, and then it opens up in Excel, can be saved also as a CSV. And based on the projects that we did in the last year, it's you normally have all the information that your local entities need to post that in their system. So we have the company, it's FinVision in Belgium, or the FinVision Newco in Belgium. We have the lessor, we see the component name, we see the asset class, we have the cost center to it, the profit center, the internal audit number, we see the account numbers, and we also see what we are posting. So that would be a book in right of use assets, then we have the monthly postings and so on. So this would be a booking voucher for one lease for 3 months. So you see that there's more postings to it than just posting asset to liability. There's interest, depreciation, and all that on a monthly basis. You have to have clearing accounts that you can clear your monthly payments again and again, that you need a good process. And yeah, the FinVision people would be the guys to discuss that in the course of the project. Going back to the tool, now we entered one contract for 1 month. And if you recall the slides that Sam had earlier, where it starts, we have the contract entering. After that, we do the categorization calculation. And in real life, contracts tend to change. It's not so easy that for cars, in most cases it is. You get it, and after 36 months, you return it, unless you order a new model that has a long waiting period. But in here, for example, somebody could make the decision that we want to exercise the extension option. And there's something we call the modification cockpit. In here, you click on the plane, and then you would say, I want to change the lease term, extension options, reassess. And then you can just pick the extension option that we just entered, say it's reasonable certain, and say that this decision was made in December. You click on OK, and then we save this modification. And now you can see that on this day there was a reassessment of the extension option. First of all, now you can see that the contract runs longer now, and we have for the extended term the 12,000. And the tool will also give you all the postings that we need for the reassessment. Somehow it seems that I have not entered the right date, but that the extension option, probably I got some problems with the mouse, so probably the date switched a little bit when I entered it. So the tool will calculate the effect of the change of the extension options, and this will also then be reflected in the postings that will be in the booking voucher. So all those changes are done automatically, and that's a huge advantage over doing it in an Excel spreadsheet. And in addition to that, there are some reports. For example, we would have a contract overview that you can take a look at all the contracts that you have in the group and sort them by certain ways, also sort them by the accounting numbers and see what are the biggest contracts, where are the biggest payments. You can also compare what you pay for forklifts in one country or one company to the other. So it's really a database that then can be used for more things as an analysis than just looking at the book numbers. Balance value as of reference date would give you for a certain point, not only in the past, but also in the future, what's the asset, what's the liability, depreciation, and those kind of things, so that you can also use that for forecasting purposes a little bit. You can say, I want to have the report balance values for 2020, 31st December, and then the current status of your entered contracts would be rolled forward until that date, giving you some insights how your depreciation and your interest, your EBITDA effects will be for the next 2 years, for example. And that's an information we found out is interested for quite some CFOs. Asset register is kind of like an asset movement schedule. I think we have one open in the repository so that we don't have to extract it again, but take a look at some already extracted reports where you would get for contract by contract or component by component the value of the assets. For current year you would get the additions, the disposals, impairments, and accumulated depreciation. Basically, you get everything that you would need for the disclosures. In addition to that, also when you set up the transaction plan with the accounting theme, a lot of clients, you have one account for cars, one for buildings, one for other office equipment, and so on. And with the movement types that are reflected in the booking voucher, you can also have a movement schedule already in your general ledger. That's something most clients also do, that when there's a disposition that comes with a certain movement type and so on, that these information can either come from your ERP system, but can also be derived in our reports here. Sam, did I miss something?
No, I don't think so. I think it was a good explanation of the features and benefits of the tool. I think there's a lot more to tell if you go in detail, but if you're interested, certainly don't hesitate to contact us and we can give you a more detailed thing. If you have, I don't know, let's see. No, okay. So let's maybe summarize here.
It's one thing that we really learned is that if you already know what you want with interest, FX rates, your asset classes, and of course the companies that account for, we can really set up that system fast. And basically we did that already during kickoffs, and then we have to discuss training, how many people enter contracts. is the entering of the contracts done, for example, also by FinVision. You do a data collection, dump it on the FinVision guys, and they enter contracts to start with, because you have to think there's a really big one-time exercise getting all the contracts right. And after that, you just do a monthly or quarterly, depending on how the accounting at your company works, update and entering of new contracts. And that's really a thing where we can get started really fast, and you can do a lot of things, but we can also, as a team, help you in moving things forward.
Yeah. I also get sometimes a question is that, well, why doesn't it interface directly with an accounting system? Why doesn't it interface with SAP? Because we see it as a benefit. But I don't know if you have your ideas, Christian. I think that's one of the benefits also, because it's not interfacing directly.
First of all, we are technically independent from other ERP systems. So if you have an SAP integrated tool, you need certain version numbers, and to have really all the benefits of an integrated tool, you would also just need one big accounting system all over your group, and that's not really what we see in reality. In reality, you have the major part of your entities on centralized one platform, and then you have board companies in other countries that don't run on that system. So then they will be stuck again with an outside solution, and it's really hard to enter those ERP GUIs then for just the accounting. And what we've seen is that also an independent system is much faster to be set up. And so far we worked a lot with this standardized booking voucher, because if you really want to interface it to each and every one of your systems, then this might be a bigger exercise. Then you probably need 20 transaction plans, because they all have different account numbers, and they also have different systems and system requirements. And normally it's easier for the companies in your group to take the standardized booking voucher and having an ABAP or something that they can import it. And that's normally, it's done much faster than if we would discuss with each and every one of your entities an own posting theme and your own booking voucher. It's something where you would lose speed, and also from cost benefits we see it that ERP systems should be open and be able to eat all kinds of different information, and our booking voucher is just one of them. And that's the experience that we made in the last year, that if you stay on the IFRS GL accounts, then normally everybody knows what to do with the information, also in his local books, because everybody has a mapping from his local books to the accounts of the group.
Okay, thank you. I think one of the things that you mentioned also, Christian, which is very interesting, is that actually you could in one day install it if you have a simple IT infrastructure, and the next day we combine, like we do now for a client tomorrow, we combine the training including with the implementation of the contract. So within a couple of days you can be already online and start working and already posting vouchers.
It's the posting normally takes a little bit longer, but if you set up the tool in your IT infrastructure, get the master data in, which is your companies, your asset classes, interest rates, FX rates, and a couple of other things, then you're ready for entering contracts. Which also means once a contract is entered, it can be calculated, and you can get the report to come up with your disclosures, with your planning estimates, with your EBITDA effects, basically with all the information that somebody asks you, you normally would do Excel magic with. And while everybody is entering the contracts and you are gathering the contracts, and that's really a time-consuming process, because you have to go through a lot of cupboards, files, and asking people that they should do some extra work that nobody really waited for. That's the time where you can discuss the accounting theme, how numbers should be posted. And normally it's also a bigger exercise that you have to go to your SAP or ERP guys and say, I would need those 25 new accounts. And that's, in a lot of cases, this takes more time than setting up the tool, because this has to be interactive with your accounting calendars. There are frozen zones where you cannot make any changes and those kind of things. So don't forget that there's also quite some work that has to be done on your systems, and that has also to be communicated to the group, that everybody can expect this new IFRS account numbers, and then people have to see what they do with that in their local systems.
Yeah, okay. What we prepared for the end of the session here is some best practices. I think some of the things are already mentioned. One of the things very important is data quality, and that's where, already mentioned by Christian, that's where we see quite some issues sometimes, is that quality is, first of all, where to look for all the contracts, because the company or the group didn't have the centralized contract management for leases. So that's already one of the issues. And second one is to have all the details of the contract and the right ones, and also have all the modifications. Even before the transition date, a contract can be modified. So you have to know it. So it's very important to work also on a process to get the data quality in the right way.
One example, for example, you have a contract which is indexed to 4-person household. So you take a look at the contract, and like with our contract, back in 2015, we started the contract with 10,000 euros. The contract runs until 2025, and now we already had 3 or 4 indexations. So you don't need the lease payment from the contract, but the actual one that is just done. And that's also one thing. When do I start entering contracts? That's kind of depending on the transition module that you are using. We are also recommending asset equals liability, because that's the easiest one. And then we could also just say that we start entering contracts only with the rest lease term. So all contracts will have a starting date of 1st of January 2019, or whenever the appropriate timing for your company is. And it's really quite some things where, when you do some discussions before, you can save a lot of time later.
Yeah, that's right. Okay, a good sponsor, of course, that's always very good to have. So somebody who sponsors and can have your whole organization, finance team embedded, and also with you, and to ensure that the implementation is done well, and also later on the whole process works well. Use of the shell software. So like Christian mentioned, the tool can be modified, for example, for the posting vouchers, but there's a standard way. So if you can use a standard way, it's always easier. The more you modify, like every software, the more complex it is to maintain for updates and etc. Sprints, what we also normally do in implementations for international groups, for example, is first of all, we start implementing it only in a centralized way. And we do everything with uploads, and we manage it centrally with the central person at the client, and they get all the information in, for example, in Excel with some standard templates. They get the information in, and it is together with us imputed into the system and managed. A second sprint would then be, and that's later on, where we will involve directly in the tool the other countries. With the roles, we can manage what they can see and what they can do, and we let them modify and manage their own contracts. So that are what we mean also by sprints, and do it step by step to ensure that your process is right, you have it under control, and you can do a step up with the new features.
Yep.
Okay, so maybe some technical things what we see, and always, because that's also one of the things we are heavily in it, is what I want to share with you. And some of the things you may recognize, some of things may not. But for example, what we see is there's quite some discussion or some some discussion about what is now the non-cancelable period of the lease. You know, that's one of the things important to know, because that's the period where you will calculate, or the system will calculate, the lease liability. And for example, you can have a scenario where we rent a building for a period of 9 years, but the lessee can enter contract every 3 years at his sole discretion. So there, the lease term will depend actually on the intention of the lessee. If they intend to stay for 9 years, then you will have a lease term of 9 years. If it's only 3 years, and it's quite possible that they will terminate the contract at 3 years, then it's only 3 years. But if, for example, both parties can enter contract every 3 years, then your lease term is always 3 years, because you don't have it under control. That's something we have seen, that's quite some discussion on. Also, for the short-term lease exemption, you know that there's an exemption that you can leases with a lease term less than 12 months, of also at transition date leases that only has 12 months to go, or less than 12 months to go, you can exclude them from IFRS 16 scope, meaning you will continue to account for them as the operating leases like we know under IAS 17. But some companies decided to include short-term leases for certain categories, for example, for buildings, just to have consistency, and mainly because some countries allow for cancellation with every 12 months, for example. But they want to have consistency on their balance sheet, and there they have decided to include short-term lease contracts. But that's something you need to be able to manage. Also, the tool will help that. But one important thing and consequence when you include short-term leases is that you need to manage that, because that means that every 2 months you may have a modification, and modification meaning, well, I have a cancellation, but I have I have renewed the contract, for example, for another 12 months. Well, this is a modification, and every 12 months you will need to get the information. So you have more modifications than necessary.
And there are best practices around it that we've seen. For example, you also have to give disclosures on the short terms and the low values. And a lot of projects started saying that we want all the leases in the tool, but in the end, there's so many coffee machines, smaller equipment that are either low value or short term, that people went on and saying, okay, we have one ERP account for short terms, one for low values, and we don't put them in the tool unless, of course, you want also to put them as a regular lease in order to increase your EBITDA. We've seen that with one client that had quite some space for expats in very expensive countries, and he put those short-term leases for flats on the books because they were a serious number. But in the end, it's really you have much more short terms and low values normally than you have regular leases. So that really would increase your workload, and in the projects, setting up the right accounts and giving good communication, what's a regular lease, and also saying that there will be a review process over your short terms and low values, that you have to answer questions if there are lease payments on a monthly basis more than 400 or 500 euros, and so on, that this really ensures better data quality. It's one thing you definitely have to look into, how you manage that process.
Yeah, that's definitely right. Rent-free periods, consider that also at before transition date, because it's still impacting your right of use asset. Quite some discussions, I think, of the estimates about what kind of discount rate we're using. I think Christian already mentioned it. Depending on country, companies, some have for all countries the same interest rate, for example, for building or cars, while other countries will do it by country, by region sometimes. It's really different practice. The thing is, it needs to be entity and asset specific. So sometimes you can question some things. Why are they doing that? But the good thing is also to know that you can apply a portfolio approach. Portfolio meaning I will use the same interest rate, for example, for all vehicles, for all car leases, I will use the same one. But you need to do it by asset class, country, by region, and also by contract length. Where can you get the discounts for vehicles? Very often you can get it from the lessor in the contract. Sometimes it may not be there, but you may be able to estimate it, or you can also ask. For buildings, you can inform at your bank what the conditions are if you would have an increment, if you would buy the property and you will have to use a borrowing for that. What would be a rate? But very often also for buildings, we're using the property yield. So we're looking for the region and see what the property yield is, and we'll use that one as a discount rate or the incremental borrowing rate actually to calculate the lease liability. There's quite some discussion and quite some estimates to be done. I think the important thing is here consistency. Apply it consistent for all components, for all contracts, all regions, entities, etc. Lease and non-lease components. That's sometimes the question is, well, a lease, for example, car leases very often have non-lease components, meaning I'm also in the lease, what I'm paying, the lease payment includes maintenance, may include other interest, may include other a lot of things. Interest is actually a lease component, not a non-lease component. But insurance costs, for example,
tire changes,
whatever. Yeah, and normally you will split it. So you will split lease and non-lease components, and non-lease components will not impact your lease liability, but you have an option to say, well, I will not do the split, and I will include lease and non-lease components in the lease liability. And that also gives quite some discussions, because we have seen contracts where the non-lease component is almost 40 to 50% of the lease payments. So, and as you know, if you include them in your lease payments, your lease liability and your right of use asset will increase, meaning you will have additional depreciation and you will have a higher EBITDA. So there's quite some discussions. The IFRS 16 allows it to you. They didn't really tell you in what kind of situations it is not appropriate to include non-lease components. If you look to the basis of conclusion, you see why they did it, but it's not mandatory. You have the option. So, but consider it. Meaning, if you consider it, know what the consequences are also. I think finally, VAT, there's also quite some discussions. Like in Belgium, you have non-deductible VAT on the cars, for example. Can I include it in my right of use asset, yes or no? And actually, the answer is no, actually, because it is not, the VAT liability is not a liability at the time you recognize your right of use asset. It's only coming when you do the lease payments and when you record the invoice. That's why you don't include a VAT. But that's a different practice under when you would buy a car lease, and there you would include the VAT. Some other last things, deferred taxes. I'm not going to elaborate a lot on that, but to let you know that there's quite some discussion whether or not we need to recognize deferred tax assets on the initial recognition of IFRS 16 and the leases. And second one is the disclosure. So be aware that it's not because you're doing IFRS 16 that you may not have other disclosures under commitments for maybe also operating leases that you need to mention with the maturity table, because you may have excluded low value contracts, you may have excluded the short-term leases, etc. So it doesn't mean because you're applying IFRS 16, everything on the balance sheet, that you may not have the commitment disclosure. So I think we are at the end. I think if I look to the questions, I see that most of them, I think all of them have been answered. So I would like to thank you all for attending this webinar. If you have any questions, don't hesitate to contact us and we are happy to help you. Thank you very much and have a good day.